Okay, watching for another possible return to the short side, but we're going to just have to wait a little bit here. Let's see what we can get going here. Okay, we're short here at 82.75, getting short at 82.75, right below this key congestion of this red line, which they tried to pop the price back up over that. That's the center of the opening range. And then this key line, which is very old, several weeks, I believe, which was a key break. It was one of the earlier all-time highs, now serving as a sort of a rigor support level. I'm looking for the selling to come back in, for this to break down, and we're watching, trying to target a move down here to 72, down around this area here. So let's see if we can get them to break down for us. Officially, it is a potential 10-point move. So if you're trading lighter size, let's try to hold out for the whole thing. But if you're trading multiples above 3 or 4 contracts, take something off at a 5-point gain, which would be around 77 half area. Okay, maybe just take something off. What that'll do is pay some of the commissions, cushion the trade if they try to re-ramp them back up again. But I am getting the right signs of certain type of divergence that hopefully will translate into that stronger pullback down towards 72 that we want. But if you can, try to hold out for the whole thing. This could be the big enchilada pullback here. It's always hard to catch those. You never know for sure, and uh, we're a little more active trading today, obviously, because of this. There's a crash of 1987 day today, kind of the historical day of that crash, October 19th, 1987. The market originally this morning got hit hard. Normally you get a bounce back. I'll give you a condensed version. They get them to bounce back, and you get selling coming in like you see here. But then the riggers just keep goosing this. Rather than letting this sell back naturally to work the lows and then lower, they're blocking that through excessive rigging and goosing the market up here. I'm watching to see if this could be the end of the goosing period here, and they're going to let them slide back lower down towards this blue line here, just right around 71 to 72. Hard to say if they're going to do that, because with the riggers, their motto is anything but an honest market, anything but let the real buyers and sellers control the market. We control the market. This is their control freak nature, and it's too bad we're so subjected to this in this era, but we are. So we have to try to, do what we can to just realize it in trading. All I'm talking about is trading here, and see what kind of reaction we can get. And people sometimes will tell me, "Oh, you're going against a bullish trend." I go, "Give me a break. It's a rigged market. They're jacking the prices up to these key levels I'm identifying, and at some point they break. And if they don't, yeah, then sure you can get stopped out. It's not because I'm fighting a bullish market. The market got hammered hard. Normally, in real markets, just like I showed you, this would have completely failed here, gone back to lows and busted the lows in the normal world. But nowadays, it's just all this fake upside jacked up market, and it's just a damn shame. We can't get an honest deal going here. I'm trying to get an honest pullback. I'm not forecasting a big downside crash back to the lows of the low, although that could happen. But I'm just an honest, hard-working scalper trying to get this market to cooperate in a normal way and back off lower. You know, they pulled them back here. You re-goosed them up higher again. You've hit your center of the opening range. Now let them go. But Who knows? You can't. I can read regular buyers and sellers, and I can read the riggers, but you never know what the riggers are going to do. The buyers and sellers are much more predictable because it's a more natural flow. The way the ticks run, the way the indicators work, everything. Especially on a day like today where they're kind of out of control. But this thing should easily be able to flow back to that last first reversal off to the ramp up. And that was down near, I think, 64, 65. I don't want to scrunch this chart right now, but it was a little bit maybe. We got to be careful here. They may keep trying to prop them up. Down here, 63.5 should easily pull back here. This thing should have already been trading back under 76, back under the opening range, but this is why we mark the opening range every day, because they use that as a measure for how much they have to rig the markets up again. Oh, we're below the opening range. Ooh, quick, call out the troops. Start jacking up the price of NASDAQ on the cash. Jam this market back up. So similarly, this is just especially going on the last couple months. But once we get them to start breaking down, first of all, under fair value at 79, then cracking the opening range. We'll have to watch the opening range very carefully. We have to watch right now carefully to see if they're going to try to re-goose the thing again, or if they're going to finally let it go. It's really hard to say because the riggers are out of control today. That's all I can tell you. Out of control. That shock drop this morning, which I suspect they orchestrated, all happened right at 3:30. Gee, what a coincidence. Just a massive selling pile on right at that exact time. Rick Santelli on CNBC, who's one of the only people there I trust, was talking about it. And it's like, he said, everybody's going, what the heck? So, a lot of manipulations here. Let's see if we can break this thing down under 79. It should easily be down there already, but we got to watch out. When the riggers start propping stuff, what they'll do is they'll do 2 to 3, 4 pullbacks, ticks, pullback, just ticks, few, and then snap them right back up to where they dropped from. And that's where it gets really creepy because you don't know. They could all of a sudden then unleash a 5-point ramp up. So, let's see if we can back them up, back them off. So 79 is a key breakdown point right here at the fair value, 79.25. Breaking under the fair value. This line will turn white if prices start stabilizing below this orange line. Orange like the bull color, bicolor for fair value. As prices move under this, if they do, if they don't start propping up the 80 handle again, jack it up to 83, we should be able to see a dip down under this, down towards the bottom of the opening range down here at 75.50. So if they can break down under fair value here at 79 or lower, we're going to watch for a move down to 74 to 76 zone and see how the market absorbs that. We're short at 82.75. That's price we're short from right now, 82.75. Right up near the highs here. 84 was the high. So if we can just crack 79, we should see another pile on. And the truth is, a real target to try to achieve would be down in this area. Kind of makes me a little nervous, but let's at least go for it for now. We can always adjust things back later. It doesn't matter. We're just looking for longer. Let's go with 66. pull, if you got a bracket on, just yank that bracket down. I'm doing that right now. Yank it down to 66. It's kind of a, right now it looks like a wishful thinking move, but if things start happening and they start really letting go, sitting on their hands, the riggers, odds of pulling back down to 66 are not so far-fetched. I'll put this yellow line here. That's where we're going to kind of target it. And again, we're short from up there at 82.75. Let's see if we can lose 79. You notice right when I mentioned that and they tapping the fair value or just above it, notice how they're snapping them back a little bit. So we got to watch very careful for these rigger type manipulations where they go to fair value here, they try to snap it back to 81, 82. Hopefully it should crack 79. They should break it. That shouldn't even be a problem. But they crack 79 and we should get some action going on the downside. Just a matter of time, I think. Right in here, they should be willing to start cracking down here. So let's see if we can just slowly but surely get the market to start backing off. Ideally holding under 83 without rigger interference and start losing 79. And then the first key is going to be that under 79 is going to be 76.50 to 77.50 zone. If they can break 79, get down into that 70, like an average of right around 77, and lose 77, hold in general under that level, 71, then it shouldn't be too outrageous to forecast a move to 66. This could take some time, though. I'm just letting you know. The move that we're in here could take some time. If we're even fortunate enough to get it. The riggers might come in and try to do everything they can to block a dip down to 76. So we may have to go through some ups and downs. That's the only trade I see right now. As long as they hold in general below 80 and ideally 79, the path over time should be down to 66. And that's what I'm going to attempt to target. But we will, naturally, we always do that. We'll update gradually as we merrily roll along on our attempt to knock this thing back down to the successive levels under 77. Well, first holding under 79. They still haven't done that. The riggers could come back here and start propping it up again anytime. They went 78.25 in that last dip. We can hold under 79. We watch for the bottom of the opening range at 75. Trading back under the bottom of the opening range sends out a strong message to the riggers that the price is working the bottom of the opening range. They may come in guns a-blazing, or they may just sit on their hands and let 75 lose ground. If we get down there, and if that happens and all the successive moves occur that I'm expecting, then we'll watch very bravely and nervously to see if they can crack under the opening range, like I mentioned, right around 60 handle, 60.75 handle. Bravely and nervously watch to see if they can get them down to this orange blue line and then potentially down to 66. They could come back in here anytime above 79 and just try to re-goose the market up. Not a dang thing we can do about it. It's just riggers. It's just the way the game's played. You'd think with that huge shot across the bow there would be millions and millions of investors going, whoa, 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 okay, enough of this goofy Apple, Amazon, Google, Facebook, Microsoft crap. I'm going to let them go and start dumping some of these things. Our hedges are all up nicely. We got, point and a half on TZA quid and SPXU. Oh, here they go again. Shoot. Doggone it. Ah, shit. Just like I said, they're just re-goosing them all the way back up. 79 pullback, the exact number I gave you. They dipped them down to 78, and here they come in here again with a big spike, just re-goosing them back up. Not a damn thing. Look at that. Unbelievable and disgusting. Oh, God. Not a damn thing we can do. So thoroughly disgusting. Thoroughly disgusting. Not a damn thing we can do with these stupid riggers. Makes trading so difficult. We're short around 83, and these stupid riggers just can't grow up and let it go. Trying to re-goose the market up here again. Just what I had mentioned, and look, you see that? It just comes out of nowhere, rocket ship high. Nothing you can do. Nothing you can do. It makes trading very, very difficult. Doesn't depend on what you have, indicators or all the things and tools I bring to the table. If they start jamming the market up, there's nothing you can do. Just out of control riggers. Just, creating these artificial upside markets and not willing to let them go a little bit. Not even willing to let them go a little bit. Trying to hold short here. It's disgusting, I know. Nothing we can do about it. Let's see if they back them off. Let's see if that was what I sometimes call the final insult, where they fake any short sellers out before they let them slide. I don't know that that's going to happen, but very frequently you get a move like this, and I call it the final insult before they're refusing to let them go. They start pulling back, and they come in and give you the final insult, jacking them up like that, and a lot of times that's a high. I can't promise you that's going to be the high. We probably need to get out here pretty soon. Try to keep the losses controlled. That's all you can do. This business, all you can do is control the losses and do the right analysis. But today we're having a little cage fight with the riggers. Sometimes it's a dance around the riggers. It's very pleasant, smooth dance. And sometimes, like today, it's more of a cage fight. It's not my fault, just the riggers. I can stand aside and close the room and say, oh, it's too risky today, we're not going to trade. But what does that do? So I go in and we're going to try to cage fight with them a little bit here and see if we can beat them. See if we can get this thing to pull back to 66. Hey, I'd settle for 60 or 76 right now. We can't even get that going. These foolish riggers just don't want the little weird party they got going to end. I don't know what they get out of it other than thinking they're going to raise interest rates again or something. I don't know. Weird bunch of people. Nobody really knows their agenda. Everybody talks nice about them, and they have their meetings, and the newspapers and other people all kiss their butts, but nobody knows what they're really up to. So we're short 83 area. Let's see if we can back it off. Let's see if that was what's called the final insult. And now they're going to all of a sudden be under 80 again. That would be a good sign that might have been what I've called carefully, jokingly kind of named the final insult. We survived it. We're still in the market here. And let's see if they're going to let them go again. Hey, it's a volatile market today. I warned you. If you don't like it, just stand aside. Don't follow the trade just because I'm doing them unless you really feel you can handle the volatility. I mean, theoretically, probably should be using 10-point stops today, but I don't like to do that. Even in super volatile markets, I just We just control everything and do our best to try to get ahead. Usually this type of deal will end up flowing back to the downside. I'm just really surprised the sellers already haven't come piling in much more. I explained to you why, and you can see with your own eyes. They're rigging the exact inflection points I'm giving you, and it's pretty obvious. So we're back near our break-even entry, 83, 82.75, whatever. And let's see if we can break it down again back under 80. Get rid of 79. That was the key number I gave you before. They dipped right under it to 78. 78 quarter, and like a rocket ship to the moon, they took them off. So you can see it was a key inflection point, and they just didn't want that to break just yet. A lot of times they wait and they stall things like they're doing now, and then run a slow demolition process where the market just slowly starts breaking down. I can't stay in the market too late today. I've got to run my wife to the doctor later, but I've got about hour and a half. I hate to restrict it to that, but you never know what's going to happen in the room each day. You never know. So we're going to try to stay in profit overall. We got 380 bucks in crude, 550 on NAS, 550 points down, 100 something per contract. Let's see if we can break this thing down. Hopefully in the next approximately, I'd have to be, I'd have to be out of here by 1:30. So hey, we got time. I got about 2 hours. And that's normally not a restriction day, but she's got an important procedure that she needs. She got in an auto accident long ago, and poor thing suffers so much. But usually I'll have one of her nurses or a caregiver can take her, but today it was important for me to take her because I got to be in on this procedure and find out what's going on. Anyway, don't worry about it. We'll get them done here. This thing shouldn't take that long, but if the riggers just persist on playing games and keep jacking that 79 price up, or they start to try to do it again from here, or they stall the markets out, which is another one of their tricks, then we just have to face that music, take a little loss on the mini NAS and a nice gain on the crude oil. These markets, they don't act normal anymore. That's why I got all these hedge fund guys complaining now. Some have quit the business. I've seen at least 3 reports that I call in zero hedge. These long-time established hedge funds that have done very well for we're sending all their money back. I mean, can you imagine you have $1 billion hedge fund? You make that decision. The head trader, the head owner and runner of the hedge fund says, I've never seen this kind of crap before. I can't run my models that I've used to be so successful with running a hedge fund. My models aren't working because of the rigging, and I've seen 3 in the last 2 or 3 months. They say I'm sending the money back to the clients, closing the fund. I can't run my models with this. Maybe we'll come back when the riggers, grow up and stop doing this. That's pretty heavy when famous hedge fund guys close their fund. So there's no point. Anyway, I'm not trying to be negative. We can always carve out a paycheck. That's not a big deal. We can trade crude oil. We can trade the mini NAS. But and normally every day we hit our target goal or close to it. It's not a big deal. But you're going to have days like these where they're just so out of control, the riggers, and they're playing this whole game that it makes it a little harder to carve out a paycheck. I get the feeling, though, we'll get them. I mean, eventually, today, more than any other day, the sellers should be much more willing to come in. I'm betting they're already there coming in, but the riggers are doing this propping. I mean, I don't have those figures, but if you could compare retail actual selling figures, I don't know what would show that, like on a, say, like an half an hour hourly basis. I'd have to look it up and find out. That'd be kind of cool. I'm going to make a note of that. I would bet, you'd see tons of retail selling come in on NASDAQ because that's where we're trading. And that's why the more they sell, the more the riggers come in and prop up the cash markets, and hence our baby, the mini NAS, gets propped up right at those key inflection points. NAS sales on retail. I'll see if there's something out there that gives me an indication of. You can look right up here and see that the advanced decline line means more issues declining on the New York. This is New York Stock Exchange, big board. More issues declining advanced. This was 1200 early this morning. It's gotten propped back up. Gold's moving back up a little bit here. All right, let's see if we can get this thing going here. Try to get him back under 79. Lose 79. It should have a stronger effect right now with this current chart pattern I'm seeing. Let's see if we can get 79 going or lower. Break 79 down. Now keep in mind we're still targeting ultimately. Let me put some kind of different color on this, or just real quickly let me just size it a little bigger so it really stands out, almost obnoxiously so, but I just want you to distinguish this one from our other key level. So right now the next key level is this 76 area we discussed earlier. 77 is like the number 77, 76, 50, 77, breaking down, and then really important, losing the bottom of the opening range. If we can lose the bottom of the opening range here and crack this down, we then watch for this blue. Now, what I got to measure this fib. I got to put the fibs in, and we're gonna have a lot of lines coming in here. Don't worry about it, because we're targeting way down here. I want to run the fibs from right at this blue line. Whoops. And let's run them and get those fib lines in there so we can really get a little extra road map here and get some rubber on the road on the downside. Okay, we're running the fibs right up here to the top. We're going to fan this out, and the lines they're still going to be there, but it's going to thin out a little bit here. Won't be as many, but there are, well, we got a lot of lines here. Oops. Sorry about that. Easy to adjust. There we go. Okay, so now look at that. Look at him breaking down. Look at this 77.50. Gee, what a coincidence. Just happens, that number I gave you, 77, 70, just happens to correlate. Fibonacci 1, Fibonacci 2. See, I'm using the fibs now to just calculate the pullback down to the bottom of the opening range. See that? And then we started measuring the fibs right from 71. So all I'm trying to do is see if we can get below back. I want to use it on this tighter, then I'll erase the fibs and redo them. But right now I want to see if we can hold in general under 77, lose ground down here to the bottom of the opening range, lose the opening range, and stage a move down. What are these lines here? Let me just quickly determine. Oh, this was the earlier target. So I'm going to get rid of this line here. This is a longer term hold. This isn't just, I know we got 7 points or whatever in here. Take something off right in here. Take something off at 5 points or more if you're trading multiples. We're getting the reaction I wanted. But what we're doing now, I'm going to keep this chart really clear. Everything looks in sync for a stronger move lower. So we're trying to see now how much of a selling pylon we can possibly get under this fib number here. They quickly sold off to the fib number to hold generally under 77, 78 and break down 75. And let's see if and how fluid such a breakdown under 75 is. Let's see how strong the riggers try to defend 75. And I'm well aware that that represents an 8-point move. I don't really care. I've got an exact specific target that I'm trying to work here, and that target is either down near this blue line here, 71, 76. So right now what I'm trying to determine from watching the current price is whether we should opt for getting out in this area if they break down under the opening range here at 75, or is this a really good chance of a stronger pylon, which so far I'm suspecting it could be 75. Well, just have to see. But I would say this would be a minimum target for this trade down here in this 71 area. And again, scrunching up the chart just to staying dialed in. This was the first ramp up after the hard crash this morning, right at the top of the hour, right when we opened the room around 10 o'clock, 7 on this chart, Pacific chart. The rebound, this is going to get hit with selling and usually take out the lows in a real bearish type day. But what they did was the riggers, they pulled back and then the riggers rescued them and then they went nuts and ramped the thing to the moon. And that's what we've been trying to work a short in for a stronger pullback. So this is asking the thing to go all the way back down to here. In other words, the market asserting that it's really a stronger crash coming in, sellers piling on the anniversary of the October 19th, etc., and we get a $100 down day or more. That's probably what we'd need to see in order to achieve, well, we'd probably need, like, I'm just guessing, like a Dow down about 70 to go down and hit this on NAS. I'm just estimating, though. It's not correlated mathematically, just an estimate that the Dow starts being down 50, 60, 65, 70, and then we get this stronger NAS punch down here. Maybe not as much, but maybe that up to that. So I'm going to show that we took off 6 points. Right when I call it, it was 6 points in our favor at 70, just under 77. Here at 76 is when I said make sure and take some off. So 76, 1/3 of the position, which is 4, 5 plus 675 on that, taking 1/3 off. Actually, let's make it 650. 76/4. 5 to 650, somewhere in there. If you followed our regular rule of taking some off at 5, that's good. Now we're going to watch and see if we can get some continuation downside punch under the fib number. It's setting up here for potential slow grind lower. We took some profits in case they can't put it past them. In a normal market, not a problem, but with these riggers so out of control, we can't put it past them, trying to re-ramp it all the way back up to the red line again. But for now, we're just watching for a slow grind lower, see if they can knock them down to the bottom of the opening range. And what I want to do if they get down there is see whether they plow right through it or the riggers go on massive defense to try to hold it up. We're getting close now. So the price action around the bottom of the opening range and what the riggers do with it will just depend. So I'm watching, we're getting some minor signs of thrust. Not quite exhaustion yet, but I am watching for potential signs of exhaustion on a further drop. We got to watch for that. We got to be dialed in that that could happen. So far, nothing just yet. A little minor, because, I mean, it's a big crunch here. But if we hit, see, that's why I give you these target numbers, but I got to watch the indicators in correlation with those. In other words, if all my indicators are getting blasted and they're all just way overextended, probably better to exit the whole trade and reshort a bounce back into that bias. But right now, from what I'm seeing, this probably is set up for one of those just sit on your hands and hold them short for that move down to 60. What are we targeting again? 60, right here, 66. 50, 66, yeah. 60, 66. Oh my God. Sounds like the mark of the beast. The rigger's favorite deal. Let's see if we can get them going here. Let's see if we can get them going. Breaking 75. Watching the price action around 75. Watching to see if they can take them down, smoke them down under 75. Is it a dibble-dabble, kind of picking away at it, kind of toying with the bottom of the opening range? The riggers defending the bottom of the opening range, which they're doing exactly right now. It's exactly what they're doing now. You see that dip down into the opening range. Hitting this yellow line too, which was there before, but it just correlated today. It was a minor blip above a last all-time high, so I left that in there. It just happens to correlate with the the bottom of the opening range. Notice how they ran right to the bottom of the opening range, that yellow line. They're slightly, I just left it in there because it was a key marker from, I think, 5-6 sessions ago. So these numbers all end up correlating. It's so amazing. But certainly right now we can see initially the riggers are defending the breakdown at 75 or lower of the opening range. It looks like the chart pattern is forming a pile-on here. So, but it was a big kind of crunch here. We got the Cobra crossing under the orange filter line, and now the dynamic trend band number 1. The crossover's kind of far away from the first pullback. So it's, again, it's still a mystery whether they're going to let that bottom of the opening range go. The CNBC sycophants start chiming in more. Instead of just showing all this football stuff, they would get a little bit serious and start showing real technical analysis of how many, like what I was saying earlier, some kind of measure of showing retail sales increasing, stuff like that. I'm going to find it. There's got to be one somewhere. So Black Monday, as it was known today. How's that? Black Monday anniversary, October 19th, 1987. Look how they lost that 25.56 to 61 zone on the ES. So We'll see if they can break that down further. I don't know. Here's 76 coming in. Let's see if we can get rid of 75. The question is, how willing is the market willing to sell off 75 under that and hammer it? Or how much effect are the riggers having it propping it up? That's the real big question right now. What I've got in front of me suggests that they should be able to hit them stronger on the downside here. The chart pattern, everything I've got here is suggesting that. So let's see if we can move this thing, get this thing moving lower. There's going to be some back and forth, but ideally 75 is going to get hit with selling. They're going to smash them down. And what we're going to do is, if they do that, if we smash 75, we don't have to sit here for half an hour and play games with the riggers propping up 75, which they might. Then we'll watch and see if breaking under 75. See, look at the price is stalling. Riggers are trying to figure out what to do. They're trying to hold back the floodgates of selling. I think the public's probably letting them, a lot of sales coming in, but they're fighting that. Let's see if we can break 75 down. Now, if for any reason we get a hard, fast pile on right down under 75 to 71, I may clip the trade because it's going to start getting into oversold turf. So watch for that. Now, stay ready. If we get a hard, fast, and I mean a hard, fast dive down to 71, what I might do is just let them go down there, cover up the trade for 10 points. 10 points. Stay ready to cover up the trade at 10 points not 10 points, but a move to 71. We're going to cover up the trade at 71 and re-enter the trade. 72, 75. It represents 10 points for us. So that's another spot if you maybe want to take some off. But I'm trying to watch for a further dive down to 71 to cover up this short temporarily. And we will look for a rebound to short back into. So stay ready. But I am ultimately targeting a move. If you want to hold, I'm targeting move to 66. Let's see if they can take them down to 71 or lower to cover them up right here. Here we go. Stay ready. Did we go to 71? I think we just did. We went 71.50. Well, Murphy's Law, Trying to get them at 71. Take them off at 71.50 or lower. And if you want to hold, they're going to 66 most likely over time. But what I'm trying to do is get them out and then short a rebound. Okay, let's see if we get another dip. Again, I still, the best thing to do is to hold for 66 if you can do that. But what I'm trying to do is the truth is I'm trying to just be a little extra careful by getting out at that 70, taking off 10 points at 275 or lower and then taking them off at 71.50 on the whole thing, just because what I want to do, I'm really worried about this blue line, but by getting them off there, at least we lock in that gain, and you should have already locked in a partial on the 10 points as per my instructing that. Watch for a move to 150 or lower. We're going to take them off. Just be aware there could be a stronger pile on the sell side, but I am starting to get extended oversold readings here, so I'm just taking them off. We just hit 71.50, a double tap on that. So this trade is closed out at 71.50. Okay? So great job, you guys. We'll figure out the rest of it later. They're going to 66, maybe worse. Maybe the whole selling starts really piling on later. But I'm going to watch for a rebound to potentially short into. I just got to watch the market here a little and see. But we're out at 71.50. So that whole trade net was 82.75 short minus 71.50. 11 and a quarter plus 11 and a quarter, and we took partial off at 76.25 for plus 6.25 gain. So great job, you guys. Appreciate it. They're going to 66 most likely, but I just don't want to sit through um, a rebound, possibly back to 76 for a shorting area, but I may decide to just skip that and consider ourselves lucky that we got out here pretty much just a little beyond the normal amount of time we spend in the room. But if you are holding, what I would recommend you do, take any strong dip down under 70 that gets a selling pile and could happen anytime, that drives them down to the 68 to 66 zone and cover them up there. And if they rebound them back up, then that's another determination. But odds are they're going to head to that 66 to 68 zone. Maybe they'll do it on this move here, but we're out at 71.50. Excuse me. Great job, and we'll look forward to seeing you soon here on the next trade.